All right, several things to go over today. I'll be here today, I'll be here Thursday morning, and then after that, you guys know I'm gonna be gone for the next 2 weeks, so I kinda looked at. What's that? About to go crazy? I don't know. Um, your assignments and everything are pretty well laid out. Today, I'm gonna go over, you've got a ticker symbol assignment, I think, due this Thursday, if I'm not mistaken. Then I think next week it's finding financial information. And then I don't think there's anything due until after I get back on project two, so I'll be able to discuss that. But today I'll go over that finding financial information and what I want you to look for there and whatnot. But I'll bounce back a little bit, take a look at that ticker symbol. The actual assignment for that's, if you look at the content under that project two, is in this introduction. Where's that at? In this Word doc here. So you want to open that up because the assignment reads like this. Oops, wrong one, sorry. And read this. It doesn't take you too long, but you're going to develop some skills to evaluate the financial information. Eventually, you're going to write an evaluation of the company that's your choice. Okay, it's going to center on the company's financial statements. Probably the biggest critique that I make of students in their final paper is that they've strayed from the central theme of the assignment. So they end up telling me too much about other stuff related to the company and not about the financials. Okay. There are a couple other things that I want you to mention in the paper just because I think it kind of adds to the paper, and that's going to be a little bit of the history of the company, the industry in which they compete. Okay, you'll tell me about those things, but then you want to focus the rest of it on the financials of the company. So your first assignment for the ticker symbol, right? After you've chosen the public company, that was basically an assignment, but that one was kind of ungraded. Find the ticker symbol of that company. We talked about that. Usually it's 1 to 4 letters. Tell me the company's last closing price. Okay, and we can look some of those up. Tell me the company's PE ratio. Tell me the company's previous year's earnings per share. Some of that's pretty easy. Once you know the ticker symbol, you could come to Bing or to Google or whatever, and you might be able to just enter in the ticker symbol of the company. Let's pick Google. I'm going to put in just the GOOG because that's the ticker symbol as opposed to the whole company. It kind of brings this up. I don't know, is this Yahoo or Google's finance or whatever? It gives me an overview right here. So their current price right now, and I wouldn't mark you wrong if you gave me their current price right now, but their previous close is listed right over here, $2,776.95 per share, right? The PE ratio, you might look at different sources and come up with different PE ratios, and the reason for that's simple. Some will state the PE ratio based on the last 12 months earnings. Some of them will give you a forward-looking PE ratio. Some of them might go to the end of last year and give you the PE ratio based on that. So you might have different PE ratios. So again, you give me a number, I usually kind of click on it, I'll look up the company, make sure it's in the ballpark, right? Because there are differing ways of reporting that PE ratio. What's PE ratio? Price to earnings is what that means, right? So our price here of the stock is $2,740, right? The earnings, I don't know what the earnings are, okay? Now if I come up here to financials, this isn't the best place to look this up, but okay, revenue of, do we got the balance sheet cash flow earnings? Earnings per share, $60. Okay, this is where the PE ratio, what was the PE ratio? 30, yeah. Price of 27, so 60, that would be more like 45 PE ratio, right? 2740 divided by 60. But this was their fiscal year end, December 2020, when these earnings were, okay? So that's why the PE ratio may be a little bit askew there, but this is the last year's earnings per share, which is what I want you to report, right? The 59.15. So it's a pretty simple way to look some of that up. Again, I prefer, if you came to the FINRA, and, oops, I like this site. I want to go Google. Same price, right? PE, it lists it as 26.45. Again, we're going to find some varying because it depends on what they're using for the earnings, whether it's trailing 12 months, whatever the case may be. Last year's earnings per share, might not say it here, right? I don't think it does. So then I need to come here and I can look at the financials, income statement, earnings per share. See, now we're up to, using the TTM, which is trailing 12 months, $93.31. What's the difference between basic and diluted? Basic is the actual shares that are outstanding. Diluted takes into consideration shares that may be out there for stock incentives and whatnot that the company may give, right? Stock options oftentimes that they'll give to their employees. And so when they calculate the diluted, they'll take those into consideration. Okay, that's why that's sometimes a little bit less. So if you take that 93 now and you divide it into the 27 something, then you're closer to that 30, right? Okay, so that's what your price earning. That's the only, isn't that the only things on that assignment? Yep, last closing price, company's PE ratio, and the company's previous year's earnings per share. And again, neither one of these would be wrong if you told me that their previous year's earnings per share were 59.15 based on the calendar year, which is their fiscal year end as well. That's fine. If you gave me the trailing 12 months, I'm not going to count that wrong either. That's a huge jump, by the way, man. 40% or so in 1 year in terms of earnings. Wow. Okay. I should have bought some Google stock. So, you know. Okay, questions about the ticker symbol. Okay. We move forward then to the finding financial information. I get a little bit more in depth in terms of some of this stuff. Okay, you know how to find the stock quotes. Okay, trying to get you guys to look up this information and go to different places to kind of look at it and take a look at it, right? Most of this in here you're going to be able to find in the FINRA. Okay, so report the sales trend for the past 3 years. Again, if I go to Google, I went to the financials, I went to the income statement. Sales and revenue are synonymous. Okay, sales and revenue are synonymous. We take those as the same. An accountant might argue that there could be some slight differences in that, and that's true. Okay, but in this case, I probably want the year-end numbers. Okay, if I go to the trailing 12 months, then I'm talking about through September, probably. Yeah, then I'd have to go through September here and through September here. So let's just do the 3 years, right? So you got 182, 161, 136. So what's been the trend? It's up, right? Okay. But I ask you to calculate it. How do we calculate that? You guys had a stock question that was just like that, right? In terms of finding the rate, okay. You've got a present value and you've got a future value. Make sure you put your present value in as a negative. So you got a present value, you got a future value, you got a number of periods, okay? And boom, click the button that says calculate the rate, look up rate, right? That's going to give you what the annual growth rate is, and that's what I'm interested in, is the annual growth rate. Okay, I hope that's what I asked for here. Yep, calculate the annual growth rate as opposed to the overall growth rate, right? If you did the overall growth rate, you'd take the sales this year minus the sales from that year, which is what, 46, that's probably in billions, 46 billion, okay? So you take 46 billion divided by 136, and that would give you your total growth rate, but I want the annual growth rate, right? That'd be about a 30% growth rate, but your annual growth rate's probably closer to 10% then, something like that. Okay? Same thing with the earnings per share. Going to do that the exact same way, right? So we got earnings per share of 44 present value, 59 future value. Put it in as negative, positive, term, number of periods, I should say. Boom, then it'll give you what the rate is. So it should be pretty simple. The most recent ROE, what's ROE? Return on equity. I love ROE. Well, look at that. We got financials. Right next to that, we got something called key ratios. Oh, golly, you think I might find it in there? Okay. You got profitability ratios. Oh, there's return on equity. Okay. Yeah, be careful, because now the other ones were going from left to right, and now this one's going from right to left in terms of the years. So our most recent return on equity at the end of last year was $19. Trailing 12 months, it's 19 bucks, I'm sorry, 19%. Trailing 12 months is up to 28%. Again, that's phenomenal. Okay, that's phenomenal. If I'm an investor and I got a company that's my equity. Remember, I'm the shareholder. If I get a company that's returning 19% for me, I'm pretty thrilled. Now they're earning 28% for me. I'm really thrilled. Okay. ROA is return on assets then, right? It's right above it. Return on assets should be smaller than return on equity. If they're equal, it means that the company has no debt, right? It's not a lot different here, which means Google doesn't have a lot of debt. Okay. You can tell that just by looking at that. Those are the kinds of things that, I'd like you to get used to kind of seeing and figuring, right? You can kind of glance at it and say, oh, geez, that means Google doesn't have a lot of debt. I could verify that and go look at the balance sheet, but I don't need to. What's been the gross profit trend for the last 5 years? Now I got to go back to the income statement. Here the gross profit from a dollar amount has been increased. The cost of revenue has been increasing, but the gross profit's been increasing. But I might be interested in looking at how they're doing, okay? And what do I mean by that? Well, I like to click on this, and really their gross profit as a percentage has been decreasing. They were at 61% back in 2016, and now they're at 53%. Obviously, though, their EPS, earnings per share, has gone up dramatically. So where are they doing it? Well, maybe they're saving some money in operating expenses. As a matter of fact, they are. Okay, we're getting ahead a little bit, but these are the kinds of things I want you guys looking for, because that could be a part of your analysis, right? So the gross profit as a percentage has decreased. It's really nice. This is why this FINRA is nice. I really like it, because you can toggle back and forth between these, get the dollar amounts. Can you report either or both? Yeah, both is better. So, right? So gross profit has gone from 55 billion up to 98 billion, but as a percent of sales, it's decreased from 61% to 54%. A little tough there, right? But they're making up for that by increasing their sales then too, right? What's been the operating expense for the last, so that was the next question then. So while cost of revenue's gone up, operating expenses have gone down almost by an equal amount, right? If you look at the percentages. Okay. So they're kind of making up for, cost of revenues gone up. They're kind of making up for that by decreasing their operating expenses. And that's, as a company gets bigger, you should expect that. That's one of the advantages of getting bigger, right? You can spread out some of those expenses over more income. So you'd kind of expect that. Cost of revenue, a little different. Has the company's long-term debt, if any, increased or decreased? Now I got to go to the balance sheet, right? Which is right here. Click on that. Balance sheet, total debt, long-term debt, right? Non-current, long-term debt. Okay, I got it now as a percentage. I think I'm gonna like this better if I look at it as a dollar. Okay. Long-term debt's gone from 4 billion to 4 billion. Okay, but you person might want to. I'm sorry. This last year, it actually jumped up to the end of this last year, it actually jumped up to 14 billion. So they added $10 billion in debt. They also added, this would be interesting if I were doing my report on this, they also added quite a bit in capital leases. You know, for the size that Google is, this is just peanuts. I mean, Google's huge, this is peanuts. But it also tells me that they probably did something these last couple of years. Bought another company or something, took on some other, expanded some stuff, I'm not sure. They bought YouTube several years ago, so it's not YouTube. But they might have done something. I'm probably going to look that up. Okay. Some other long-term liabilities. Now those have been decreasing since here. Okay. Total non-current liabilities have gone from 11 billion to 40 billion. Okay, over the last 5 years. Yeah. Again, for the size that Google is, that's peanuts. Remember, they're earning, what did we say, how many billions per year? Okay, so they could pay all that off in like 6 months or something if they really wanted to. Is that it kind of for, and then I say this, examine the company's most recent. So you get a lot of information here, and we can do quite a bit of analysis, or at least initial analysis, just looking at that FINRA thing. But you're going to need to look at their annual report to figure out some of this stuff, okay? And this is exactly it. I can look at Google and say, oh, gee, look at that. They took on a lot of debt here this past year, but this doesn't tell me why. And your analysis needs to tell me why. So when you're doing that in your final paper, that's what I'm looking for, is the why of this. So what do? I go and I look for the annual report. And sometimes, and I picked a company here, I picked McCormick. It was one that was on my watch list. I haven't invested in it yet or anything, but they make the spices and stuff, right? A couple of years ago, they bought French's mustard, so I don't know. But anyhow, so I'm kind of looking at that. And so I just Google it, annual report McCormick. I'm going to tell you this annualreports.com isn't a good place to go. I've gone down that rabbit hole a couple times. I think they want money to give it to you, and these are all available for free or something. So just avoid that if you see this annualreports.com. It looks like a nice spot. But I come to this one, and it just says PDF 2020. Most of these are in PDF format. 2020 Annual Report, McCormick and Company, Inc. Yeah, that's kind of what I want, right? So I'll click on that. Brings it right up, okay? It's great. The part of this that I'm really looking for is going to be the 10K. Okay, the 10K is the part of their annual report that gets sent to the SEC. That's their financial documents. Okay, the other stuff, the first 18 pages here is the fluff. I'll call it that. It's important stuff, but it's kind of the fluff that they want to send to their shareholders. Okay, they are required, by the way, to send this out every year to the shareholders too. Okay. They're required quarterly to report a lot of this stuff. 10K, the fact that it's a 10K means that it's an annual report that does go to the SEC. They do 10Qs are quarterlies. Okay, eights are other information that they send periodically to the SEC. So I want to go up there to page 19, right? There it is. I can tell just by looking at it, the Form 10K. Okay. I'm going to scroll down because what did I ask you for in this thing? Examine the company's most recent annual report and tell me what it does in the words of management. It's okay to copy and paste much of this. That's fine. You can copy and paste all of it. But just make sure you cite your source, and I say that should be the annual report. Oh, okay, so I come down here. Item 1, business. And annual reports are going to take virtually the same format from company to company. This 10K, okay? That's why I want you to get to the 10K. They're all going to look pretty much the same. And so you'll find this. Okay, so I'm asking you, I said, tell me what it does in the words of management. Well, this is the words of management. McCormick is a global leader in flavor. The company manufactures, markets, and distributes the entire food industry, retailers, food manufacturers, and food service businesses. You could stop there. I would be okay with that. Okay, it does go on to say, and if you included this, that's fine. We are also partners in a number of joint ventures. Okay, but you could have stopped there after that second sentence, and that would have been fine. Okay, so really, this exercise is to get you to find the annual report. By the way, the most recent annual report is probably not going to be enough. Okay, you're going to find stuff that happened 2 or 3 or 4 years ago when you're looking at the FINRA stuff, maybe. you're gonna say, oh, I might have to go back and figure out what happened in 2017, okay? You go back to the tax, lowering of taxes that happened in the Trump administration. Sometimes there were some funky things that happened in some of these companies. It's kind of interesting to look at, so, okay? So you may end up doing that, and that's fine. You can Google that and find those, or there's some other ways, and we'll kind of go over that. Okay, any questions about that assignment that's going to be due? Okay, I think the book assignments that you're required to do in quizzes are pretty straightforward. While I'm gone, I don't see any problems with that. Again, I'll be here Thursday. I'll have my tablet with me, and I'll be checking my emails probably every morning. If I can find a place to go and check them, Starbucks or someplace that I can get Wi-Fi. I guess the place we're staying doesn't have Wi-Fi. So if you need to communicate with me, do so via email. I'll try to be checking those and getting back to you. I probably won't do a real good job of keeping up on correcting assignments and whatnot, so you'll see me getting behind on those. You probably won't get a lot of feedback on those for the next couple weeks. I'll have to bust my butt when I get back to get caught up on those. So, okay. Any other questions then or anything? Okay. I'm going to stop there then and let you guys get at it. There were several, I should add, there are several of you I know have sent back some feedback still on the final for Project 1. Okay. If you don't have a grade yet for Project 1, I want to come around today. I want to see the things, the feedback that I gave you, whatever it is, because we want to make sure we put that to bed so we can devote all of our efforts to Project 2 now.